Welcome. In this video, XCN versus XLM, which one should we buy? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
First, let's analyze XCN.
In technical analysis of an asset's price, a descending trend line generally indicates that the price has been moving downward for a certain period of time. This descending trend line is a line that connects the highs of the price movements and slopes downward. It shows investors that the price is generally weakening and that selling pressure is stronger than buying pressure. However, a break of this descending trend line, meaning the price moves above this downward sloping line, is considered an important breakout signal. This signal indicates that the price may be starting to move upward, leaving the downward pressure behind. When the price breaks a descending trend line, it technically shows that selling has decreased and buyers have entered the market more strongly. This breakout often creates a positive perception among investors, and therefore it triggers new buying. As a result, the expectation arises that the price has escaped the previous downward pressure and may be entering a new upward phase. This means the price can gain upward momentum again, buying volume can increase, and the price can move toward new resistance levels. Breaking a descending trend line also has a major impact on investor psychology. Downtrends that last for a long time create a pessimistic atmosphere among market participants. Selling pressure increases, and many investors begin to close their positions to minimize losses. However, breaking this trend line restores investor hope, changes market sentiment positively, and attracts the attention of new investors. As a result, buy orders increase, liquidity rises, and the price can shift into an uptrend. In technical analysis, the break of a descending trend line is generally considered a more reliable signal if it occurs with high volume. Increased volume shows that the price movement is supported and that market participants are validating the move. This increases the likelihood that the trend change will be permanent. Breakouts with low volume, however, can sometimes be temporary and misleading. The price may resume its decline. Therefore, when evaluating a trendline break, it is important for investors to also take volume data into account. The attack that occurs after a descending trendline break usually means that the price moves upward rapidly in a short period of time. This attack allows the price to test previous resistance levels, and if these levels are broken, new highs can be reached. Volatility can increase during the attack, creating both opportunities and risks for buyers and sellers. For this reason, investors need to act carefully and strategically. Such breakouts can yield different results under different market conditions. For example, if the overall market environment is positive and investor sentiment is high, a descending trendline break can turn into a strong and long-lasting uptrend. However, if the market is generally weak and risk appetite is low, the attack following the breakout may be limited and the price could fall again. Therefore, investors should pay attention not only to technical signals, but also to macroeconomic and market conditions. When expecting an attack after a descending trendline break, investors must set their stop-loss levels carefully. This is because not every breakout in technical analysis will be successful and the price may fall back below the trendline. In such a case, predetermined stop-loss orders are triggered to minimize losses. Likewise, planning take-profit points is essential for successful trade management. This way, in both favorable and unfavorable price movements, investors can avoid making emotional decisions and act with discipline. In summary, breaking a descending trendline is a strong technical signal that the price may be starting an upward move after a long downtrend. This breakout changes market psychology and investor sentiment positively, increases buying pressure, and allows the price to test new resistance levels. This upward movement, known as an attack, can offer significant profit opportunities to investors if approached with the right strategies. However, market conditions, volume, and other technical indicators should always be considered, and risk management should never be forgotten. Therefore, in attacks following descending trendline breakouts, being careful and informed is the key to successful investing.
One of the chart patterns frequently seen in price charts and closely followed by investors is the W formation or double bottom pattern, which is generally considered one of the strong signals indicating trend reversals. This pattern forms when the price makes two similar lows over a certain period of time, with a rise occurring between these lows. It gets its name because it draws a shape similar to the letter W on the chart. Essentially, the W formation shows that the market first experiences a decline, then attempts to recover, but falls back to the same low level again before rising once more. The most important part of this structure is that after the second bottom, the price should start moving upward. Currently, the price being at the second bottom level points to a critical technical area. A rebound from this level would mean the W formation is completed, which can be interpreted as the start of an uptrend. The second bottom shows that selling pressure in the market has significantly decreased, buyers have regained strength, and the price is preparing for an upward move. If the price begins to rise successfully from this point, this movement serves as confirmation of the formation and indicates that buyers are strengthening and taking control of the market. A reaction from the second bottom in the W formation is considered a very important support level from a technical perspective. The strength of this support level reduces the risk of the price declining again and increases buyers' willingness to enter the market. Investors view this level as a kind of floor and expect a rise from here. Therefore, an awkward move starting from the second bottom not only completes the formation, but also increases investor confidence and enhances the positive sentiment in the market. In addition, the upward movement from the second bottom is often supported by increased volume. Since volume reflects market participants' activity and the strength of transactions, high volume accompanying the rise strengthens the validity of the formation. In this case, the price enters an uptrend supported not only visually but also by trading volume. Movements without volume support are generally short-lived and may be viewed with skepticism by investors. The W formation is generally a positive reversal signal indicating that a downtrend has ended and the market has begun to recover. This reversal signal offers investors a new buying opportunity because the rise starting after the second bottom often recovers previous losses and typically causes the price to increase significantly. Therefore, the successful completion of this formation is an important step for the market to regain strength and head toward new highs. When the price finds support and rebounds at the second bottom of the W formation, it also brings with it an important resistance area from a technical analysis perspective. This is because the upward move from this level often provides the necessary strength to break the previous downtrend. Investors buy to break this resistance, helping the price enter a new wave of upward movement. If resistance is broken, the price can rise rapidly, and reaching the formation's target price levels becomes easier. After the formation is completed, the target price levels are generally calculated by projecting the distance between the bottoms upward. In other words, the rise starting from the second bottom can increase by an amount equal to the distance between the bottoms, which means significant profit potential. These targets play an important role in planning investors' trading strategies and act as a guide for risk management. In conclusion, the price currently being at the second bottom of the W formation is a critical and promising situation from a technical analysis perspective. If the price successfully rebounds upward from this point, it signals the start of an uptrend and presents significant opportunities for investors. However, other technical indicators, market conditions, and risk management strategies should also be considered in this process. When evaluated correctly, the W formation is a strong reversal signal and a highly valuable tool for understanding market dynamics and shaping investment decisions.
XCN and XLM are two different projects in the cryptocurrency market, each representing distinct visions and goals. These two coins differ in terms of technological infrastructure, intended use, ecosystems, and market positions. Therefore, evaluating a scenario where XCN replaces XLM requires a detailed analysis and a broad perspective. In this explanation, we will first provide a comprehensive look at the technical and fundamental features of both projects, their market dynamics, user bases, competitive environments, and future potential. This will allow for an in-depth examination of the likelihood of XCN surpassing XLM and what this would mean for investors. XCN is a next-generation platform that emerged from the combination of artificial intelligence and blockchain technology. Its technological infrastructure prioritizes flexibility and scalability. It aims to offer innovative solutions in areas such as smart contracts, decentralized finance applications, and automated asset management. This aspect of XCN makes it not just a payment tool, but also a versatile, multi-purpose ecosystem. In addition, through AI integration, it seeks to improve users' transaction experiences and develop automated strategies. These technological innovations and potential contribute to XCN's rapid growth and its ability to become a more active player in the market. However, such innovative projects typically require time and effort to achieve adoption, regulatory approvals, and market acceptance. On the other hand, XLM, known as Stellar Lumens, is an established blockchain platform that has been active since 2014, focusing on cross-border payments and microtransactions. XLM enables fast, secure, and low-cost money transfers between banks, financial institutions, and individuals. In this respect, it has been integrated into projects aimed at increasing financial inclusion, especially in developing countries, and is preferred by a large user base. One of XLM's main advantages is its partnerships with major financial institutions and its strong market liquidity. In addition, its years of experience in the market and its reliability in the industry enhance its value in the eyes of investors, further solidifying its market dominance. For XCN to replace XLM, meaning for XCN to reach or surpass XLM's market value, user base, and adoption rate, is not an easy goal. Achieving this would require XCN to continuously develop its technological infrastructure, build strong strategic partnerships, reach large user bases, and succeed in regulatory processes. However, the strong foundations XLM has built over the years, its broad ecosystem, and its established position in international financial markets stand as significant obstacles in front of XCN. In the crypto markets, it is rare for one coin to completely replace another, and when it happens, it usually occurs over a very long period. The market is competitive and fast-changing. New projects enter with innovative features, but existing strong projects leverage user trust and institutional connections to maintain their positions. Therefore, XCN's likelihood of surpassing XLM depends on high growth and adoption rates. Meeting these conditions requires not only technological success, but also alignment in marketing, regulation, user experience, liquidity, and market trends. If XCN overcomes these challenges and replaces XLM, dramatic increases in its market value and price could occur. Based on current analysis, if XCN's price reaches XLM's levels, it could potentially rise to around $28. This would represent an enormous profit opportunity for investors. However, it should be remembered that such high growth expectations also bring high risks and volatility. Market conditions, global economic factors, and uncertainties in cryptocurrency regulations could influence this process. Additionally, even if the scenario of XCN surpassing XLM comes true, it could mark the start of a period of increased competition in the overall market, requiring investors to act cautiously. Careful analysis of the strengths and weaknesses of both projects, proper risk management, and close monitoring of market news are essential. In this process, acting prudently and strategically while being prepared for sudden market movements is of great importance. In conclusion, XCN and XLM are two significant crypto projects with different technological structures, use cases, and market dynamics. While XCN replacing XLM points to high growth potential, achieving this is not easy and is filled with significant challenges. Investors would be wise to analyze both projects in depth and take market risks into account before making decisions. Such scenarios, while exciting in the investment world, require strong foundations and long-term strategies. Therefore, although it is theoretically possible for XCN to surpass XLM, in practice, it would be a challenging and lengthy journey. In this journey, technological developments, user adoption, regulations, market trends, and competition will be decisive factors.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.